versus the previous quarter. We had recognized PLI income in the previous quarter for incentives for FY23 and FY24 based on clarity that we would be able to get those incentives. Now this quarter only has for PLI recognition for this quarter only. So that sort of factors in the dip in percentage margins, if I can say that, from previous quarter to the current quarter. After also having said that, I think the other factor that plays a role is project execution. When you look at the numbers quarter on quarter or year on year basis, these are always blended numbers. So depending on the projects that get executed, the deliveries that get done during the quarter, margin would move a little bit here and there. But as our revenue scale up, as we diversify our customer base, you'd see that hopefully there'll be more predictability and steadiness in the margins.
Got that, sir. This is Rucha Somaya joining you guys. Thanks for joining us on the show. Next question that I want to ask is on the BSNL and the BharatNet deal. So what kind of revenue do you expect in the near term going ahead? Because last time you had mentioned about the conversion into revenue by FY25. So do you still stick to that? What kind of progress is on these two deals?
So on the BSNL, we are executing, this particular part of the contract. And we expect to get some add-on sites, in the coming month or quarter. So that's one thing. On the BharatNet, I believe we are in the tender process right now. So that, it's not in the bag, and we are working very hard to be part of that.
Right. Mr. Dhingra, your closing backlog is roughly 7,000 odd crores. So I want to understand that, what will be the execution timelines for the same, and when do you expect to start recognizing revenue for the same?
Okay. So see, 7,091 crores of order book at the end of the quarter. Now, a large part of this is BSNL 4G project. As we mentioned earlier, we expect this project to get completed from a shipment point of view within this year. So significant execution of about 75-80% of the order book is likely to happen this year itself.
Right, sir. So a little bit of margin dilution that you mentioned going ahead because of the deal going into FY25. So will it stay around the 15% levels, or do you expect a little bit of dip here on?
See, our projects, while we generally don't give more project-specific guidelines or the guidance on margins, but I think generally the current project, the wireless project being first project from our perspective, the margins are slightly lower than the rest of the business. As we go along, execute this project on a percentage basis, margins, and also given the size of the order book, size of the order, percentage-wise, the margins may be a bit lower, but on an aggregate basis or an absolute basis, it would still be a reasonable number, and we'd expect to continue to maintain that trend.
All right. Mr. Anand, my next question is to you. Your international business has seen a dip of roughly 4% this quarter. And, I want to understand that what are the kind of headwinds that you're facing there, one thing. And do you expect that international business contribution will go up in FY25? And if yes, by how much? And what will be the levers for the growth of international business?
Yeah, look, today the international business is a very small percentage given the size of the big BSNL deal. But what we are doing is we are investing in sales and marketing, building the teams out, having relationship with customers, potential customers, to see if we can win more business there. As we mentioned in our earnings, we actually won a tier 2 service provider. We are well in testing right now, and we hope to see that converted to revenue. And then there are others who are talking to us. This is going to take time, right? This is not something that's going to happen overnight. But this is one of those cases there where we have to continuously engage, build out the teams, get through the testing, and then you will start seeing that growth there. And our aspiration is that at some point we want international business to be a significant portion of our total revenue.
All right. Moving on, expansion of network backbone in the utilities segment is what you had mentioned as one of the levers going ahead. So I just want to know what kind of percentage of the total revenue will that be going ahead into FY25 for your business?
See, these are opportunities that we're chasing right now in active pursuit of some of these. Whether there are two parts to it. First, when do they really materialize in terms of getting reflected in the order book? Some of it could be 25 and some could be in 26. And, revenue size would also depend on the final contract. So hardly, sort of difficult to give the contribution to revenue at this stage.
Right, all right.
Mr. Dhingra, I want to understand from the financial side of things, you're sitting on a cash of almost 600 odd crores, which is quite a significant number. So I want to understand that where will this cash be put to utilization for? Are you expecting any kind of organic expansions going forward?
So, yes, we have cash of about 600 odd crores, and I think some of it is getting used for execution of the project for our working capital requirements. Over the last few quarters, we've increased our borrowings as well, particularly on the working capital side. So some of the cash is going to get utilized there. And as we continue to invest in building our teams, in building our products, we'll look to utilize this cash for that purpose as well. While, whether it is organic, inorganic, we remain open to all the situations. And yeah.
Right. So talking about inorganic expansion over here, what kind of progress is there on the amalgamation with Sankhya Labs, number one? And on the other side, I also want to ask in the large deal front. So two large deals that we have with BSNL and BharatNet. So any kind of talks over here for the near term that can be converted into the revenue growth going ahead?
So, so the first thing on Sankhya, the integration is going well. We got clearance from NCLT, so I think we're waiting for the orders. The teams are, integrated, and we are continuously integrating the teams into Tejas. So that is actually well on its way. On the BharatNet, as I said, right, it's still in the tendering process, so we have to bid, win, so we can't bake that in yet. But again, we are doing everything to ensure that, we have a good shot at it. On the BSNL, as I said, we are waiting for the repeat order. We are just focusing on execution of the current one. And then as we do, we hope to get, additional orders.
So you are planning to get more order from the BSNL within the FY25 is what you're looking at right now?
Well, we don't know about the timelines yet. Right now, as I said, we are just focusing on executing the current one.
Okay.
Right. So, Mr. Anand, now I want to understand with respect to the key opportunities segment, you're targeting expansion in terms of, the BSNL's 4G backhaul network, the BharatNet Phase 3, the Indian Railways coverage. What are the kind of overall conversions, in these key opportunity areas that you're expecting, and what kind of revenue growth are you expecting out of all of these opportunities?
So look, we don't give guidance. I think, all we would like to do is to ensure we have a good, complete portfolio, and that we have a seat at the table and opportunity, and have a good shot at every opportunity that comes. And, some of it we're going to win all, and some may be partial. But again, once you have the portfolio, I believe the rest will come.
Okay. Coming to the wireline business, you have won two strategic deals, one with the tier 2 operator in the US and also with an operator in Southeast Asia for the broadband rollout. So what kind of revenue growth do you expect it to ramp up soon in the near term, or is it like kind of a long-term strategic deal win over here?
So it's usually these are all multi-year deals, and then once you get through the testing and you're qualified, you're integrated into their systems, then I think we'll start getting repeat orders from them.
Right. My next question is for both of you gentlemen. I mean, both of you can take it up one after the other. The budget is expected to be announced tomorrow. What are your expectations with respect to this particular budget, particularly with respect to your industry as well as, your overall expectations?
Yeah, I think overall over the past few years, we've seen government proactively take measures for driving growth, for driving domestic manufacturing, promoting Make in India and Atmanirbhar. So at a broader level, I think we would expect the similar strategy or the similar approach to continue. And that would work well for companies like us as well. We've been beneficiaries of the PLI scheme, and we'd hope to see continuation of similar schemes as we go forward, which supports domestic manufacturing.
Okay, well, gentlemen, thank you so much for taking our time and speaking with us at NDTV Profit and giving us those insights on Tejas Networks. But with that, it's time to slip into a short break. On the other side, we will be speaking to the management of Patanjali Foods about quarter gone by and the way forward. Stay tuned.
Co-powered by Canara Bank. Together we can.
It's the most important union budget in many years. And all eyes will be on how the finance minister builds the road to Viksit Bharat.
We are working to make India a Viksit Bharat by 2047.
But not without a fair share of politics. Will there be a tilt towards populism? How will the finance minister balance between welfare, capex and fiscal discipline?
We get you the most comprehensive news and views on budget impact for investments, the taxpayer and the economy. Ride the bullish India wave only on NDTV Profit.
A powerful driver of India's growth. The Indian economy, development of all regions, technologies and innovations. Inflation is moderate. Investments are robust. More comprehensive GDP.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
A powerful driver of India's growth. The Indian economy, development of all regions, technologies and innovations. Inflation is moderate. Investments are robust. More comprehensive GDP.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow.
the newsmakers, the trendsetters, and the innovators.
Welcome back. You're watching the Small and Mid Cap Show. Well, now we're joined by Mr. Sanjeev Asthana, who's the CEO of Patanjali Foods. Well, Patanjali Foods came out with its Q1 FY25 results recently. Mr. Asthana, welcome to NDTV Profit. My first question to you is, Q1 FY25 net profit is up 200%. However, revenue has seen a 7% downward trend. Give us some color as to how the quarter has gone by, and how does FY25 look forward?
So two parts. One is that on the edible oil front. So I think, it's very gratifying that we've turned the corner, and the results have been, pretty much in the run rate of what we are always aspiring, that they should be upwards of 4% margin, and we're quite pleased about it. Our volumes were marginally down in this quarter on the edible oil side, but that's very to be expected, because typically this is a very low season. The demand side is exceedingly low. And in this particular window, we don't tend to do high volumes. So we are pretty confident that this will grow. The margins have improved substantially. On the FMCG side, our, the revenues went down a bit, and partially due to excessive heat that we witnessed in the northern parts of the country and several other places, but that we are expecting should start to stabilize. So broadly, if you ask me how the results have been, I would say that very balanced, both on the FMCG and the edible oil side. The going forward in the next 2 quarters, I believe that it will be at a normal run rate, and the last quarter should substantially improve. So pretty much our guidance for the whole year is that we should expect superior performance compared to the last year. And one major event that will happen is our HPC business that we are going to be acquiring. And hopefully, once the regulatory approvals and the shareholders' approvals are in, so at least anywhere between 5 to 6 months during this financial year, we should be able to take those revenues and the profitability in. So I think end of the year, we should be in a substantially better position.
Right. Mr. Asthana, as you rightly mentioned, your margins have significantly improved. So going forward, I want to understand that will you be able to, sustain the margins at the same level, that is around 5.7%, or do you see an upside from here? And if yes, what will be the levers for the same?
So certainly 2 parts which I just mentioned, that one is the natural sort of margin, addition that we'll have on account of the HPC acquisition. But overall also, I'm expecting our margins to start improving, as we consolidate the entire FMCG foods portfolio with the HPC portfolio. And second is on the edible oil side, if I'm not expecting any significant volatility, so we should tend to, go on this side of improvement only. So net, I would imagine that we should be closer to 6.5% margin, by the end of the year. Which should, which will set us on the stated objective that we had, that in 5 years' time, we want to go towards a double-digit EBITDA on a blended basis between edible oils and all the FMCG portfolio that we have.
Understood. And how quickly do you see yourself, going to that double-digit EBITDA?
So maybe in 3 years' time. So every year, our target was that we'll keep improving by 100 basis points every year.
Right.
So we clearly are seeing the stability on the edible oil side. We are doing better than expected on the FMCG portfolio with HPC getting added. I think we should be pretty much getting there between 3 and 4 years' time.
Understood. And, with respect to signs of rural recovery, the entire FMCG space right now is seeing signs of rural recovery. Have you also observed the same? And what kind of green shoots are you seeing there?
No, so rural markets have, been consistently improving over the last 2 quarters. I'm expecting with all the support that the government has provided through the MSP increases, with the more money post the harvest that the farmers have, the demand side should start to pick up for sure. We are also expecting that the budget that will be unveiled tomorrow should be supportive of the in terms of the more money being placed in the hands of the rural areas, both the farmers and the non-farm part of it. through better schemes and more sort of economic activity getting generated. So certainly, I think the firmness of the rural recovery should get established better. And we should be going to a period where we should see substantial progress on the rural demand side. And I think it should augurs very well for the FMCG companies.
Right. And Mr. Asthana, one last quick question. In FY24, your revenue stood at roughly 31,700 odd crores. FY25, what is the kind of revenue target that you have? And at the same time, what is the kind of bottom line that you're targeting at?
I'll just explain that the revenue on the edible oil side, we don't chase per se, because that is subject to the per unit price internationally on the edible oil side. So I would state that if we can grow our volume by anywhere between 4 and 6%, it should be quite satisfactory for us for the edible oil side. And on the FMCG side, our growth aspirations are between 12 to 15% year on year. So if we can achieve that 12 to 15% growth on year on year, will be good. And on the income side, anywhere between, depending on the timing of the HPC business, I think we should be anywhere between closer to 1,800 to 2,000 crores of EBITDA this year.
Understood. Well, Mr. Asthana, thank you so much for giving us those insights on Patanjali Food and taking our time and speaking with us at NDTV Profit. Well, with that, it's all that we have on the show for now. Stay tuned for more news and updates on NDTV Profit.
Co-powered by Canara Bank. Together we can.
It's the most important union budget in many years. And all eyes will be on how the finance minister builds the road to Viksit Bharat.
We are working to make India a Viksit Bharat by 2047.
But not without a fair share of politics. Will there be a tilt towards populism? How will the finance minister balance between welfare, capex and fiscal discipline?
We get you the most comprehensive news and views on budget impact for investments, the taxpayer and the economy. Ride the bullish India wave only on NDTV Profit.
A powerful driver of India's growth. The Indian economy, development of all regions, technologies and innovations. Inflation is moderate. Investments are robust. More comprehensive GDP.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This is NDTV, and you're watching NDTV Profit. In association with Samman Capital.
Hello and welcome. You're watching Ask Profit on NDTV Profit. I'm Smriti Chaudhary and with me is Alex Matthew. And this show is geared towards your stock-related queries, be it a technical query or a fundamental one. Do write to us on the WhatsApp number that's flashing on your screen or on any of our social media channels and we'll get them answered by our guests. But before that, let's take a quick check of the markets. Here, the Nifty 50 pretty much flat at this juncture, not doing too much, trading with a negative bias at this point. If you look at the broader markets, doing better than the benchmark. Nifty mid cap up about 1% in trade, while Nifty small cap about 0.7% or 0.8% up in trade. Let's pull up the contributors of the Nifty 50. It's the heavyweights that are dragging the index, like RIL, that's down about 80 points. There's Kotak Mahindra Bank, Wipro, ITC, that are all down in trade after not as great of results as they were expected. However, there's HDFC Bank, Infosys, Mahindra and Mahindra and NTPC that are in the green and are contributing positively to the index. Let's also look at the sectors. You have the Nifty Realty that's a drag today, FMCG, oil and gas, IT, all in the red. On the other hand, you have Nifty Healthcare Index, Pharma, Auto in the green. Healthcare and Pharma doing especially well, up over 1% in trade. Most of the stocks today are moving on the back of the results. There's Oberoi Realty that's up 4.5%. There's PVR Inox that's up 2% in trade, both on the back of their results, the first quarter results. However, there's a pack, which is the chemical and fertilizer pack, that's doing much better today. You pull up something like an RCF that's up 11% in trade. There's fertilizer and chemical Travancore that's up 8% in trade. There's Chemplast up 7% in trade. GSFC also up about 5.5% in trade. There's another pack, which is the defense pack, something like a Cochin Shipyard, that's also doing well in trade. Garden Reach also up. There's Cochin Shipyard about 4.5% in trade. So these are a couple of stocks that are doing well in trade today.
Absolutely, and it's all about the budget, right? Yes. Of course, the heavyweights have reported their earnings, and we were talking about it this morning. About a quarter of the Nifty 50 in terms of weightage reporting numbers for the first quarter post-market hours on Friday, and that's all playing out, as Smriti just pointed out, in the equity markets today. Let's get our experts on board then. We've got Avinash Gorakshekar, who's Director Research at Profit Mart Securities, and Rajesh Palvia, who's Senior Vice President Technical and Derivatives Research at Axis Securities. Thank you so much to the both of you for joining us this morning. And like I said, it's all about the budget trade, right? So I'm curious first, and normally we go to our fundamental expert about a particular stock, but I want to go to you first, Rajesh, based on what you're seeing on the charts. And I'm sure that a lot of our viewers are going to be curious about how to trade derivatives ahead of this big event. Would you say that caution is advocated? Would you say that you should wait till the dust settles? How would you position yourself, and are there individual counters that you're looking at closely?
Good afternoon, Alex. Good afternoon, everyone. So we have already witnessed some volatility ahead of event. So most of the positions are, aligning themselves ahead of this big event. We have seen most of the mid-cap stocks have witnessed profit booking in last week itself. And Nifty also corrected from its recent high and almost tested a level of 24,400. Looking at the derivative data, the major put-based concentration for this Nifty is placed at around 24,400, 24,300. These two levels are very important and critical ahead of budget event. If it breaks below 24,300 on budget day, or or prior to budget or post budget, then possible follow-up selling action we can witness, and then Nifty can go down further to 24,000 level. Even below also, there is a possibility we can slip to below 24,000 level also. So 24,300 should be kept as a stop loss. Those who have already hold the position ahead of budget, if we break those level, then I think one should exit some of the trading position if it breaks below 24,300. Even for Bank Nifty, the major support area at this moment is placed at 51,800, 51,700. These two levels needs to watch closely ahead of budget. If he breaks those level, then possible down move can extend to 51,200, even 51,000 for Bank Nifty also. On the higher side, the major supply zone is placed at 24,650 and 700 zone for Nifty. If we cross 24,700, then rally can extend to 25,000 also. So I think these levels needs to watch closely at this moment. To play this budget move, I think short triangle would be the only strategy where one can focus deep out of the money call put one can write. So 23,500 strike one can write and sell, and on the higher side 25,000 strike one can sell. These could be the possible trade setup one can deploy ahead of this budget event.
Fair point. All right, that's a derivative strategy that you should bear in mind. Avinash, a veteran of many budgets, and of course over the long term, it's not like this particular week is going to govern anything from the perspective of a long-term portfolio building, right? But any opportunities that you see heading into the event, anything that you're buying today?
Yeah, good afternoon, Alex. See, first of all, we are advising most of our clients to be on the fence. I think the budget is tomorrow. I think it's better that we take a constructive call once the budget is out. We understand all the elements of the budget. But I think one clear theme which is likely to be coming in this budget is the rural India theme. I think one could expect a lot of announcements for the rural sector, because this is one sector which has actually suffered a lot. So I think you could look at fast-moving consumer goods. You could look at agrochemicals, fertilizers, anything to do with rural India. Companies which are largely supplying to the rural markets are obviously going to be key beneficiaries. And I think investors should also note that there has been a lot of hype and expectation for sectors like defense, railways. I think here possibly one should not be surprised if some big announcements don't come out, because already a lot of announcements have already come in. So I think rural India related sectors and rural India related companies, Alex, could be better choices. And I think definitely if post the budget, as well as even if somebody wants to take a call today, one could definitely chip in. But I think one should take a longer term view, because budget is just one instrument. The longer term journey for the capital markets is not going to be governed by just one document. So I think tomorrow let's wait and watch, but hopefully it should be a mix of both growth and populist budget, which I think the market has already largely discounted.
All right. Yes, we'll be looking out for that. Avinash, let's start off with the queries. The first one is for you. This one's from Ramesh, who's writing in from Hyderabad. The counter they're talking about is Patel Engineering. The question is, should you buy at the current price? Now, we saw a little bit of weakness in the counter after the MD Rupen Patel passed away a couple of days ago. But from a fundamental standpoint, they're yet to come out with their first quarter numbers, but fourth quarter numbers seemed pretty good. There was a QIP, I remember, and they saw pretty good demand there as well. So from a fundamental standpoint, do you consider it a good buy at this point?
Yeah, I think my guess is, Patel Engineering is one of the market leaders in hydropower projects. And I think it already has an order book of close to about 19 to 20,000 crores. And the management has already given a commentary that in FY25, they are targeting for orders of 25,000 crores. Now, clearly, the payment cycle is long in this business, but typically there are very few companies which operate here. And the government is obviously going to promote hydropower as another element of power, source of power. So I think clearly, visibility is very strong. Plus, the management is very well rooted. They know exactly the business very well. And despite the fact that the managing director unfortunately passed away, it has got a very well laid down management team in place, which I think is confident enough of carrying on the projects in future also. So I think, if somebody were to buy now, one could look at a price target of roughly about 65, 70. within a time frame of at least 8 to 12 months. I think this sector is definitely going to see a lot of action, and Patel Engineering is one of the primary players. So I think from a longer term perspective, one can comfortably accumulate, but not with a short term view.
Okay, fair point. I'm coming back to you on another hydroelectric play, and we're talking about SJVN. We've got Johnny Martin from Dhanbad, who's bought 300 shares at levels of 128, and I'm just trying to pull up the chart and see where it's currently trading. 143 or thereabouts is where it is at. So he's in the green right now, but he's looking at a long-term perspective. Avinash, would you hold on to this?
Yeah, I think, if the investor has a 2-year view, Alex, I think hydropower in India is still a very small component, and these companies are extremely profitable. SJVN also made a, offering OFS to, large institutional investors, and now the stock is held by a lot of, institutional as well as PMS and HNI, kind of investors. So I think you have to give some time for this stock, because, now the stock has multiplied significantly from double-digit levels. And I think now the journey will be purely based on the earnings and the order book kind of accretion. So prospects continue to be good. So I think if you have a 2-year view, I think you can continue to hold on. Prospects look pretty promising.
Right. The next counter is GMR Infra. The question is from Dr. Sanjeev Dikshit. They've been holding the counter from a price point of 35 rupees, Rajesh, a considerable profit there, and we've seen the price doubling in the last 1 year. Do you see this trajectory to continue? And if you can give us a target on this counter as well.
So Smriti, GMR Infra is now trading near to its 50-day moving average. Looking at the short to medium term structure, stock is in bullish trajectory only. Though some consolidation is happening in the stock since last couple of weeks, but still looking at the short to medium term setup, we still hold our bullish view as the stock is holding about a breakout level of 88. So till stock is holding above 88 level, there is a possibility that, again, we may see a good up move in the stock in short-term perspective. Once stock crosses above 100 level, then there is a possibility of moving further higher to 115 to 120 also. So I think he may hold the position as stock is in process to form a rounding bottom formation on a monthly chart, which is long-term chart. So I think if he can hold for furthermore, couple of months, I think there is a potential of 120 to 125 level also.
Understood. Reliance Industries losing quite a bit of ground. Smriti pointed this out at the start. It's down about 3% and proving to be a bit of a weight on the benchmark right now. The question is coming from Vishakha, and she's wondering whether to buy it at the current market price, just about 3,000 rupees or thereabouts. Avinash, we're off the high point of the year. But if I look at the 1-year performance, it is still trading, if I'm not mistaken, about 800 rupees higher than it was at the low point. There we go. So it was trading at close to 2,200 or thereabouts at the low point over the last 12 months or so. Is this a good opportunity to buy, in your opinion? Because a lot of people have pointed out the possibility of value unlocking when we're talking about the listing of the retail business as well as the Jio business. But the O2C business has been a bit of a disappointment.
Yeah, I think, Alex, if you take a slightly medium-term view over the next, say, 12 to 15 months, I think Reliance has definitely come to an attractive level. In fact, the first quarter numbers for Reliance have also been quite good. My sense is that the Jio business is, getting scaled up quite strongly. The oil and gas business has also settled down very well, and the retail business continues to do well. So I think, now in the very near term, there could be no near-term triggers. But one thing is very clear, that the management is hopeful that by December, possibly there could be a value unlocking for the Jio business. The retail business is again lined up. So I think clearly, Reliance should do well over the next couple of years. But I think, if one were to do an SIP even at the current odd level, one could definitely expect a decent upside from these levels. I think you need to have a little patience, because Reliance is one stock where, it moves pretty slowly, and you need to have a lot of conviction and patience to, make money in this counter. So I would say that you have a long-term view of at least 12 to 18 months. I think you can definitely start accumulating.
Avinash, coming back to you, the next counter is Raymond. The question is from Naman, who's writing in from Delhi. They want to buy Raymond at the current levels from a point of view of about 7 to 10 years. So a longer term perspective on this one, and now it's trading its lifestyle business. Do you think this is a good entry point into Raymond?
Yeah, I think Raymond has moved up significantly, and I think if one were to make a call on Raymond, I would suggest that it's better to do a small SIP here because you could get the benefit of averaging. Finally, the lifestyle business is hyped off, but the real estate business and the core business continues to do very well. In fact, I believe the next 2 years are going to be extremely strong for the real estate business, and we are yet to see that get reflected into financial numbers. So I think despite the fact the stock having gone up, now the market is discounting what kind of revenue and profit the real estate business will throw. Of course, the core business continues to do well. So I think somebody who has got a 2 year kind of time frame can definitely start accumulating, on a SIP kind of route, which can definitely give good returns. But please remember, this is a volatile stock, so you need to give in a time frame of at least 18 to 24 months.
Okay. All right. It's time for a quick break, but I just do want to point out the markets. At this point, you have the benchmark that is more or less flat. It continues to be the case, but the small cap index is seeing quite a bit of action. It's up as much as 1% or thereabouts, and that has showcased itself in the advance decline ratio, and the market breadth has tilted in favor of the advances very comfortably so. And that is a shift from what you saw at the start of the session. So let's see whether the market is getting some inkling of what could be announced in the budget tomorrow. We have to slip into a very quick break. We've got more on the other side, so do stay tuned.
Co-powered by Canara Bank. Together we can.
It's the most important union budget in many years. And all eyes will be on how the finance minister builds the road to Viksit Bharat.
We are working to make India a Viksit Bharat by 2047.
But not without a fair share of politics. Will there be a tilt towards populism? How will the finance minister balance between welfare, capex and fiscal discipline?
We get you the most comprehensive news and views on budget impact for investments, the taxpayer and the economy. Ride the bullish India wave only on NDTV Profit.
A powerful driver of India's growth. The Indian economy, development of all regions, technologies and innovations. Inflation is moderate. Investments are robust. More comprehensive GDP.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Hi, welcome back. You're watching Ask Profit, and we're in the midst of the query segment, or rather, we're in the midst of taking all of your questions. By the way, if you've got questions for us, just a quick reminder, send it to us on the WhatsApp number that will soon flash on the bottom of the screen. The next question is from Yash, and he's writing in from Gurugram, and he's asking about Lux Industries. And we'll have to pull up the longer term charts because he bought quite a while back in 2021. His buy price is 3290 per share, which is elevated. The stock is still trading at around 1900 despite the kind of run that it's seen over the last 1 year or thereabouts. He's a long-term investor and he says that time is not a constraint. What should he bear in mind? I know that he's looking at the long-term view, but I'm still curious about what Rajesh has to say about the charts. Rajesh, a recent move has been quite positive. It's looking strong. Is it looking good for the long term?
So stock has corrected significantly from its all-time high trajectory. Almost stock was trading at around 4,400 and all the way it has corrected to the level of 1,000 rupees, and then some recovery has been taken place in last couple of months. Though the stock is still in a bearish trajectory on the long-term chart, but yes, on the short-term structure, there is a recovery is taken place and stock managed to give breakout of almost 10 to 12 month consolidation range. So looking at the short-term structure, there is a possibility that we could see some more upside as the stock managed to give breakout above 1700 level. So 1700 is the important level at this juncture. If it continues to hold above 1700 level on a month-on-month basis, then there is a possibility that there could be a rally towards 2200 to 2400. That would be the next target where stock can move further higher. So Lux Industry, if you are still holding the position, your now stop loss should be at 1700. Possible near-term, short-term target would be around 2200 to 2400.
All right. Rajesh, the next counter is Jayaprakash Ventures, Jayaprakash Power Ventures. The question is from Ayush. They bought the counter at a price of 20 rupees. It's currently trading below that price. From a longer term, and it has given about 200% returns in the last 1 year. So it has grown very significantly in terms of price. What should somebody do who's still holding from such elevated levels?
So Smriti, stock has recovered and now it's consolidating since last couple of months in a range of 16 rupees to 20 rupees. That's the range which we are seeing in the consolidation. Though stock has already managed to give breakout of its short-term consolidation range. So we believe that till stock is holding above 16 level, there is a possibility that stock may attempt to again give breakout above 20, 21 level. If that happens, then possible target we can see towards 24 to 26 on the higher side. So I think he should follow now 16 rupees as a stop loss if he's still holding the position in JP Park.
Okay. Interesting question coming in from Rohan. He's writing about NTPC and he's also asking about Avinash, the NTPC Green IPO, which is expected in the second half of the current financial year. Somewhere around November perhaps. If he's looking to play the power generation theme in India for the long term, would you suggest NTPC or would you suggest waiting for and investing in the IPO of NTPC Green?
I think my guess is NTPC would be a better choice because NTPC Green is keenly awaited, and we all know what has been the kind of what is the kind of response for most of the green and renewable energy company IPOs. So it's difficult to take a call whether he would be able to get allotment. But in case NTPC, gives some sort of allocation quota to their shareholders to invest in this IPO, that could be a kind of bonanza. Of course, we don't know whether it will happen or whether it will not happen. But on the core business, NTPC continues to do well. Just buying, NTPC for the sake of NTPC Green would not be a good investment decision. So I think if his mind is only for NTPC Green, then I think it's better that he waits for the IPO. But otherwise, NTPC prima facie looks to be an interesting bet in the power generation space. And I think next couple of years, definitely a good, decent risk reward can come.
All right. Avinash, there's another question for you. This one's from Vishwanathan Nair, who's writing in from Cochin. Which is a better stock to buy, Jio Finance, Poonawalla or 5-star?
I think it all depends on what kind of time frame you have in mind. If you have the next 2 to 3 years, then I think Jio Finance looks better. Otherwise, the current momentum, if one wants to play the current momentum, then I think Poonawalla Finance looks quite ideally positioned. It has got a good mix of both SME as well as frontline kind of customers, and most importantly, the book has been growing quite strongly. The asset quality has been maintained well. So I think if somebody has a 12 to 15 month horizon, Poonawalla Finance can definitely do well. We are expecting some rate cuts to happen, so that also could play some sort of benefit to the company. But from a next 2 to 3 year kind of time frame, any correction one should definitely accumulate Jio Finance, because I think this is one company where you're going to see a lot of disruption happening over the next say 2 to 3 years. So I think Jio Finance is slightly longer term, but Poonawalla Finance can fit the bill if somebody wants to take a 12 to 15 month time.
Okay, slightly longer term time frame on RVNL, and a lot has been said about the fundamentals of this particular counter. This is from Partha, and I'm going to come to you on this one, Rajesh. Would you suggest a fresh entry at 622 for the long term?
So overall structure is bullish. I think at 622, yes, he may add some quantity here. If in volatility, if you get further, downside opportunity in the stock towards 600 or 580, that would be again, attractive level to add more quantity. The way stock has holding the ground at higher level, we believe that, if it's not give any kind of, corrective move in volatility, then possible target towards 660 to 680 would be there in the short period of time. A very strong buying action in the stock has taken place in last couple of weeks. So we believe that, there is a high possibility that rally can extend. So at this juncture, he can add some position. Even in decline also, he may add. Your stop loss should be placed at around 570 rupees. And on the higher side, 660, 670 would be the next target.
All right. Thank you so much, Rajesh, for that. And thank you so much, Avinash, as well, for joining us on the show today. It was a pleasure having you both on the show. And viewers, thanks for tuning in. Do keep writing to us your questions and don't go anywhere. There's lots more lined up for you on NDTV Profit.
Co-powered by Canara Bank. Together we can.
It's the most important union budget in many years. And all eyes will be on how the finance minister builds the road to Viksit Bharat.
We are working to make India a Viksit Bharat by 2047.
But not without a fair share of politics. Will there be a tilt towards populism? How will the finance minister balance between welfare, capex and fiscal discipline?
We get you the most comprehensive news and views on budget impact for investments, the taxpayer and the economy. Ride the bullish India wave only on NDTV Profit.
A powerful driver of India's growth. The Indian economy, development of all regions, technologies and innovations. Inflation is moderate. Investments are robust. More comprehensive GDP.
एक ही लक्ष्य
This is NDTV, and you're watching NDTV Profit. In association with Samman Capital.
The case for a chat, for a conversation with JSW Energy is about the Q1 earnings. The profits have risen 84% YOY and EBITDA has seen an expansion, but also that they've received new LOIs for solar power projects. And of course, based on what they've done in terms of the capacity additions, the street believes that all of their targets could well be advanced. So lots to talk to Mr. Sharad Mahindra. He joins in right now. Mr. Mahindra, good having you. Thanks for joining in. Congrats on what seemed like a good quarter, though optically the revenue numbers were lower than the Bloomberg estimates, but very good operational performance, good capacity additions as expected, and good PAT performance. Is there a missing link in the quarter, maybe on the revenue side or maybe something else, or are you happy overall?
Thank you. In fact, the revenue, if you see, is primarily because of in the thermal space. When we see the coal prices as compared to last year Q1 have moderated one, which is actually a pass-through, and also maybe a part of our thermal generation which moved to job work for our captive customer also resulted in. So revenue is basically any change in the coal prices is a pass-through, so it doesn't have any impact on the results.
Okay, so the fact that both Vijayanagar and Barmer plants saw the lower utilization, planned outage, did that have a bearing too? And of course, please do tell us if you believe that whether most of this would be made up as the year progresses.
Yes, if we talk of Barmer, wherein normally in Q1, when we go for the major maintenance of the plant, results in a lower PLF. But yes, we are absolutely confident that we will be achieving the desired PLF in the balance part of the year, and our whatever the deemed PLF of 80% will be achieved. As we are talking, our PLFs are in the range in the current month of July are in the range in excess of 90% in Barmer plant. So we are confident that we'll be achieving the desired and the targeted numbers of PLF in the balance part of the year. Regarding Vijayanagar, as you asked, Vijayanagar, if we see that there have been issues related to water availability, which resulted in lower operations. But yes, in the early July, the water supplies have normalized. So we expect the PLF in Vijayanagar also going forward will be higher than what we have seen in Q1.
Got it. So this generation upticks that we've seen, net generation up 18%, renewable energy generation up 44%. You're running slightly ahead of what was anticipated. You reckon that would be the case for the rest of the year as well? Mr. Mahindra, part one is that. And part two on the capacity additions, because again, I think we had a conversation maybe 15-20 days back when you were citing to this, but it's now been delivered in Q1. You think that's the run rate that you keep up for the rest of the year as well?
Yes. First, I'll come to in terms of the generation growth, which we have witnessed. If we see the demand growth, after witnessing a healthy demand growth in the country of 7.5% in last fiscal, current year Q1, the demand growth has been 11%, which is a very healthy power demand growth, which is primarily driven by, we see the growth, higher growth in the manufacturing sector, and also the extreme weather conditions, especially in northern part of the country, which witnessed 22% demand growth in Q1 as compared to last year. As compared to 11% country's growth, demand growth, our generation growth has been 18%, which has been primarily driven by very, very good generation in the hydro energy space, where we have generation has grown by 61%. At country level, if we see, the hydro power generation has remained muted. But on the Satluj basin in Himachal, where our Karcham and Baspa plants are located, there the generation growth has been 38%, hydro power generation. With our better reliability and maintenance of the equipments and the availability, we have witnessed a growth of 61% generation on Sutlej Basin in our plants. Along with that, the new capacity additions of wind which we have commissioned during the quarter, and also the better machine availability of the existing assets in this quarter. These all with some merchant demand growth in the thermal sector. These are the prime factors which have resulted in 18% generation growth for us during this quarter. And going forward, we are confident that the growth momentum in the country is going to remain and will continue, barring, of course, the seasonality, which at times impacts the growth. But overall, the growth looks to be sustainable during the full year. Our capacity addition, if we see that we have added about 291 megawatt of thermal capacity, wind capacity in quarter one. And as I have told earlier also, that in current year, we will be adding close to 3 gigawatt capacity, 2.8 to 3 gigawatt capacity. We are very well on track in the balance quarters, out of which 1.7 gigawatt of wind capacity work, which is in progress, will get commissioned every quarter. And we are sure that this will get added. Over and above that, 240 megawatt of our greenfield hydro plant in Himachal will also get commissioned. We are absolutely certain in the current year. And Unit 2 of Ind Bharat in the current quarter, we are sure will be commissioned. So all these things put together, we are absolutely certain of 10 gigawatt capacity addition during to reach 10 gigawatt capacity by end of current fiscal.
Got it. So 350 megawatt of that 700 megawatt in Bharat also gets commissioned in the rest of the year. Surely, the last time that we spoke, you mentioned that you will advance the targets of the 2030 target earlier. Would you want to do that at the end of the year, or are you doing it in quarter one itself?
Yes, I think before I just comment on this, I will just like to tell that the total order pipeline, what we have today, which includes the commissioned capacity, the work in progress, which I just told, and the letter of awards which we have received, we are already at 16 gigawatt, which is going to get commissioned in next few years. So so first milestone of 10 gigawatt, which we had said earlier by FY25, we are well on track. And once we deliver and we are close to that number, we will be definitely coming back. And because 20 gigawatt with this order pipeline, we are absolutely certain will happen few years earlier than FY30. So maybe at the right time when we are close to 10 gigawatt, we may be coming out with a strategy 3.0 with a revised numbers for FY30.
Got it. A word on the LOAs that you received, Mr. Mahendra. I think a couple of them that you've announced this morning.
Yes. See, we have received, as I have told earlier also, that now the way the capacity additions in the renewable energy space is happening, the plain vanilla solar or plain vanilla wind is not going to be the real solution. It is a product which needs to be designed, coupled with storage to take care of, one is round-the-clock green power, FDRE, and also they take care of the peak demand, peak hour demand, where we see that during evening peaks, there are many moments when the supply is not in line with the peak demand. So this is the first of its kind bid which came by SECI, which is a combination of solar plus battery energy storage to take solar will supply power during the daytime, and battery energy storage, battery will get charged during the daytime by solar, and it will take discharge during the evening peaks, and giving a very, very affordable solution to the DISCOMs, to the end consumer. So, and I'm happy to tell this was the first of its kind bid which came of 1200 megawatt of solar, coupled with 1200 megawatt hour of battery storage. We have been able to secure 500 megawatt out of this of solar, coupled with 500 megawatt hour of solar battery energy storage. So I think, as I said earlier, that now we have, we at JSW Energy are just not to be seen as a power generator and a supplier, but a solution provider, a customized solution provider for each and every DISCOM with various options. So on that line, we are confident that more such bids will be coming, and we will be definitely keenly looking toward these opportunities.
Wishing you all the best for that, Mr. Mahendra. Thanks so much for taking the time out and speaking to us.
Thank you. Thank you.
Viewers, thanks for tuning in. It's the most important union budget in many years. And all eyes will be on how the finance minister builds the road to Viksit Bharat.
We are working to make India a Viksit Bharat by 2047.
But not without a fair share of politics. Will there be a tilt towards populism? How will the finance minister balance between welfare, capex, and fiscal discipline?
We get you the most comprehensive news and views on budget impact for investments, the taxpayer, and the economy. Ride the bullish India wave only on NDTV Profit.
A powerful driver of India's growth. The Indian economy, development of all regions, technologies and innovations. Inflation is moderate. Investments are robust. More comprehensive GDP.
एक ही लक्ष्य नेशन फर्स्ट, एक ही इरादा 2047 विकसित भारत।
A powerful driver of India's growth. The Indian economy, development of all regions, technologies and innovations. Inflation is moderate. Investments are robust. More comprehensive GDP.
एक ही लक्ष्य नेशन फर्स्ट, एक ही इरादा 2047 विकसित भारत।
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow.
Hello and welcome. We are at the right in the center of earnings now. There's so much happening, and we have one of the top home financiers of the country, Canfin Homes, backed of course by one of the largest public sector banks, and we have with us Mr. Suresh Iyer, who's the managing director and CEO at Canfin Homes, with
Morning.
us. Hi, good morning, Mr. Iyer. Just Mr. Iyer, for context, set the context for us. This quarter, growth was slightly on the sluggish side of things, just about 9% odd. And there's also been a margin dip. So talk us through those couple of factors that have played out this quarter and what's in store going ahead.
Sure. First of all, in terms of the disbursement, we must take into the fact that this was a election quarter. So April and month definitely were a little subdued. We had, a lower disbursement in April and May, but June post the elections has definitely picked up well for us. In fact, June month on a standalone basis has been the second best month for us in the last 15 months. In June, we have the only month when we have done better in terms of disbursement has been in March 2024. So I think that is the positive that we take, and July also has opened well. So I am quite confident that the first quarter should not be the indication for the year ahead, and Q2 would be much better. And we stick to our guidance that we had given in the beginning of the year, that we are targeting around 10,500 crore of disbursement for the entire year. The second point as regards, spreads coming down, I would say this is the more normal, because we had given a guidance of 2.5 spread and 3.5 NIM. Last year, if you would recollect, we had a large chunk of portfolio coming out of, where the impact of the rate hike was being effected, and the spreads were improving from 2.31 or something in the beginning of the year, right up to 2.67. So I guess the 2.5 to 2.55 to 2.6 is a real normal, and that is where we are. We might just see a little bit of an improvement of about 1-2 bips going forward, because we have repriced our short-term CPs, which we had raised at about at the highest rates last quarter, and those have been repriced this quarter. So about 30 to 40 bips we are benefiting from that. So going forward, we might just see about 1 or 2 bips improvement from in our spreads. But this is the new normal, I would say, 2.55 to 2.6%.
Got your point. So that's the new normal in the current macro setup.
Correct.
What happens when the macro changes? Because you have RBI, most central banks, likely going to be hiking rates second half FY25. Now, anybody's guess whether that will actually go through or not. Lots of global macros involved. I understand all of that. What happens if the RBI were to cut rates? What happens to margins, and therefore what happens to your overall numbers?
Unlike the previous years where we were on an annual reset basis, effective Jan, we have changed the policy to a quarterly reset. So as the rates come down, we will also be passing on the benefit to our customers. So I don't think there would be much of an impact in terms of our, spreads going forward. We should be able to stick to it, and whatever impact transmission happens from on our borrowing side, we will be able to pass on to our customers as well. And it would not be much of an impact. And quarterly reset is, I think, a little more stabilizes our ALM as well.
Okay, so more certainty around that margin number, even in a changed macro setup. So that's
absolutely,
that is encouraging. Talk to us about what's happening with NPA ratios, because asset quality on a sequential basis has worsened. So talk us through that. Is that just a bottom line problem, in the sense that is that just because advances haven't grown as much as you would have liked this quarter, or what's happening with asset quality?
No, I think it's more of a cyclical thing. Q1 generally is like that for most lenders, because March, the amount of pressure we put and the amount of recoveries that happen, we have to give a little leeway to our customers as well. Q1 last year, we had seen an increase of 31 crores in terms of our NPA, gross NPA, and this quarter, similarly, we have seen about 39 crore increase. Again, it's more of an April effect. But otherwise, I don't see much of a problem in terms of the underlying credit quality, which will have an impact. And going forward, we should see the NPA ratios improving. Year-end, we would definitely, target for something below 0.8% in terms of our gross NPAs. It will be coupled by two things. One, increase in our portfolio, and two, I don't see much of a further increase going forward in terms of our gross NPA numbers.
All right, breaking news, and you're seeing this at the bottom of your screen, the latest updates from the Economic Survey, and the countdown to Union Budget 2024 begins in earnest, because this is the document that will set the context for the presentation of this very important document by Modi 3.0. This, remember, is going to be the budget that sets the roadmap for growth heading into the next 5 years. At the very least, of course, it's going to talk about growth much further into the future as well. Very importantly, and Pallavi Nahata is joining me on this conversation, very importantly, this document, the Economic Survey,
is talking about the growth projections and the outlook for the new financial year. It takes into account several disruptions on the global stage with regard to geopolitics, and it has given a projection of economic growth, GDP growth of 6.5 to 7%. I'm reading straight from the document where it's saying that considering various factors, the survey conservatively projects a real GDP growth of 6.5 to 7% with risks evenly balanced, cognizant of the fact that the market expectations are on the higher side. This is an important statement to make, Pallavi, and of course there's a lot more in the economic data and economic survey that we will go through, but the first and the most important point, a lower than RBI projection for GDP in the current financial year.
That's right. So the RBI does project GDP growth at about 7% or thereabout. And the government instead, the CEA in the economic survey has chosen to give a range that's between 6.5 to 7%. You know, market expectations also remain closer to the RBI's estimate. And there is a fair chance, Alex, that over the next few quarters, especially given the resilience that we have seen in the Indian economy and the fact that GDP growth has almost consistently in recent quarters surprised on the upside, given the range by the government, we will see GDP growth closer to the 7% mark rather than the 6.5% mark. But of course, the economic survey does talk about the number of factors at play and how volatile some of these factors currently are. And as such, it is possibly a mark of caution that the CEA has chosen to give a range for now. It also
and those are the words that it uses. It says it's cautious about its projection.
That's right.
It's speaking about what the IMF is projecting on the global stage. The global economy is set to grow at 3.2% in 2024. The average annual global growth rate was 3.7% during the decade ending FY20, that is the financial year ending 20. Now, it's talked about several aspects in the global stage, but on the downside, it's saying that any escalation of geopolitical conflicts in 2024 could in fact lead to supply dislocations and higher commodity prices. This is something that the RBI has pointed to in several occasions when it is chosen caution and pragmatism and said that it is not yet ready to consider easing of monetary policy. It is also saying that this could, in fact, the economic survey is saying that this could influence the RBI's monetary policy stance. The global trade outlook for 2024, according to the survey, remains positive, with merchandise trade expected to pick up after registering a contraction in volumes. It also speaks, Pallavi, about the monsoon and the fact that it is still a little cautious despite the projection for a normal monsoon, because ultimately what matters is the spatial distribution.
Right. Yes, we have seen the monsoons remain fairly volatile. June started off on a bit of a weak wicket, but we have seen the monsoons gain momentum in July, and that perhaps explains the caution being exercised on that front as well. While the deficit that we had seen in June has been made up for by excessive rainfall in several parts of the country. In July, we're still to see what August and September look like. But interestingly, it's, especially given the agricultural implications, it's July which is a key determinant of what the output for the year is going to be like, because that's when the Kharif sowing takes place. But Alex, I'd also like to quickly draw attention to, the economic survey addressing the statistical system. Now, the reason this is, of interest to me at least, is because of the fact that we have had multiple controversies in recent years regarding the MOSPI and, around the GDP, IIP, inflation, but of course, more than other indicators, the GDP or the lack of the census, we're running late on that as well, and that has had implications on the accuracy of government data. So the government has actually taken the bull by the horn, so as to say, and addressed some of those concerns around India's statistical system, it has also outlined steps that are continuously being taken by the government to strengthen the statistical base. So that's definitely something that is something we're going to be watching out for in the coming months. We are expecting a rebasing in the CPI as well, a lot of concerns around the GDP, and these are all works in progress. Like the government has said, it is looking into addressing a lot of these concerns and challenges.
Yeah. So it's interesting. That's certainly something to watch for. A more immediate thing that you would want to look at is why the economic survey has been a little cautious with regard to its projection on GDP, where it said 6.5 to 7%. That's a pretty broad range if you think about it. It says that domestic growth drivers have broadly supported economic growth in FY24, that is the previous financial year, despite uncertain global economic performance. It is said that improved balance sheets will help the private sector cater to strong investment demand. But it's saying that there is a note of caution that is warranted here. It says that private capital formation after good growth in the last 3 years may turn slightly more cautious because of fears of cheaper imports from countries that have excess capacity. Madan Sabnavis, Chief Economist at Bank of Baroda, is joining in. Madan, thanks so much for taking the time. And of course, we would have to give you a little time to go through the nitty-gritties of the document, the fine print. But what stood out to me right off the bat is the fact that the economic survey has been a little cautious in its projection for GDP growth in the current financial year. It's provided it in a range of 6.5 to 7% with risks evenly balanced. What do you make of that?
No, I think, Alex, it's a bit too conservative because we at Bank of Baroda are looking at 7.3, 7.4% with possibly an upside. Because I think the major problems which we had last year in terms of low growth in consumption and investment is something which we think will turn around in the current financial year. So I think what the government is doing out here is taking a very conservative view of taking 6.5 to 7% as the real GDP growth rate. But I think, Alex, what's really important about this particular number, because I think this is just a forecast and things are going to change during the course of the year. This may give us an idea that this particular number is going to go in when we're talking of the budget formulation tomorrow. So tomorrow, when you're looking in terms of the growth in nominal GDP, I think during the interim budget, they spoke of 10.5%. So if we're really talking of 6.5 to 7% real GDP, it looks like that 10.5% may not really change. So I think that is the kind of an implication I would derive from this conservative estimate.
One other aspect to pay attention to, Madan, is that in the past years, and they refer to private capital formation here, and they refer to private capex. We've seen this government spend quite robustly where required in pushing infrastructure, pushing defense. There's quite a lot that is set aside in the budget for these aspects. And so therefore, quite a bit of the growth is also driven by public spending. Would another interpretation be that the government is going to be a little cautious when it comes to spending? Is that something that you can derive?
See, it's definitely something which cannot be ruled out, because if I am saying that the nominal GDP growth is going to remain virtually where it was when the interim budget was presented, it may follow logically that we may not have too much of change in the capex of 11.1 lakh crores, which the government has projected. So I think that will naturally flow from it. And this would also, if I have to actually extrapolate it further, I would say the 1 lakh crores of bounty which you got from the RBI surplus transfers may probably be used more for containing the fiscal deficit and maybe spend a little bit more on revenue expenditure wherever it's required based on the election commitments which are made, rather than focus more on capex, which may also not be feasible given the fact that 4 months of the year would have been passed by the time this budget gets implemented. So we may not have that much of capacity to implement more projects beyond the 11.1 lakh crores.
All right, Mr. Sabnavis, thank you for taking time and joining us. This is Pallavi joining in. on the economy, the economic survey continues to remain fairly optimistic despite the cautious note that the government appears to be striking in terms of the GDP projection. But all in all, the commentary on inflation or on external metrics or the way forward in terms of fiscal consolidation appears to strike an optimistic note. What are you making of the commentary on the economy?
So I think one thing which we also believe is that the economy is going to perform very well in the current financial year. And even though we are talking of a number less than 8.2%, I think it's the base effect which is coming into a picture, which is keeping the number at 7.3, 7.4, which we at Bank of Baroda are saying, or maybe what the RBI is saying, 7.2, or the government 6.5 to 7%. But I think for what you mentioned about what the economic survey talks about the different sectors in the economy, especially when you're talking of things like inflation or you're talking in terms of exports, I think there's reason to believe that there will be more broad-based kind of growth which we will be seeing this year. And hopefully the kind of challenges which we had last year in terms of consumption being affected by higher inflation will probably not be there. And there could be some kind of a pickup in private sector investment. Because I think the moment we see consumption picking up, there's a case of saying that capacity utilization also improves, which will also finally lead to higher investment from the private sector. So far, we have seen private sector investing more in infrastructure-oriented sectors. This needs to become a bit more broad-based. We can take heart from the commentary provided by the economic survey that if things are going to improve in a more generalized manner, then I think even private sector investment could be looking upwards.
All right. And coming back to inflation, the government does say that in order to have a more accurate data set and be able